German GDP has come in at a better than expected 0.2%. The third quarter expansion was driven by exports, construction and household and public spending. Joining me on the phone now is Jennifer McKeown of Capital Economics. Jennifer, thank you for joining me. Now, this data has emerged on the same day as it's reported that Europe has officially entered a double-dip recession. Is it still a positive day for Germany?
Well, I think relative to how things could have been, it's a positive day for Germany. A lot of the business indicators have suggested that Germany is entering a recession, so it's a relief that, in fact, for now, Germany has continued to expand. Also, perhaps the fact that Italy, for example, didn't contract quite as sharply as we'd feared, it is a positive thing for Germany. That said, clearly, the region as a whole is in recession. The recession is very deep in the peripheral economies. Underlying conditions for Germany are pretty bad.
French GDP for November was also at 0.2%, yet we don't see Mr. Draghi name-dropping Europe's second largest economy in quite the same way as Germany was discussed at last week's conference in Frankfurt. The ECB President and German Chancellor Angela Merkel have disagreed quite publicly on several matters. Were his comments last week simply another blow in the battle, or an attempt to remove the blinkers that surround Germany? And will this better than expected data quell those concerns?
I think that most people would concede that Germany is heading into more difficult times. As I've mentioned, all of the business surveys point downwards. Industrial production, so the actual hard data on industrial production, fell very sharply in September. So I think as the quarter went on, that the situation deteriorated, and that's likely to continue into Q4. So I think really what Mr. Draghi was saying when he said that Germany was starting to be affected was more or less a statement of fact, given that hard data are now pointing in that direction. It's unsurprising that Angela Merkel, other German politicians, would try to play down the downturn in the German economy, but I think it's pretty clear that it is happening.
Moving forward, would you agree with analysts' expectations of greater economic contraction in Q4? This week's ZEW Survey would appear to support these forecasts.
Yeah, I think that's right. The ZEW has notoriously not had a great relationship with GDP growth, and it is a survey of financial market investors' expectations rather than those of businesses themselves. So it can't be relied on too heavily. That said, the business surveys up to October at least were certainly pointing downwards. They pointed to further falls, sharper falls in GDP in Q4 and beyond, both in the Eurozone and in what were the stronger economies in Q3 of Germany and France. So I think it seems pretty clear that the recession is going to deepen into Q4.
Angela Merkel commented last week that the Eurobank supervisor is not a programme to be rushed into. How will this week's data factor into her argument?
I doubt that these data will factor very heavily. I think the point that she's making is that this is a structural programme. It's a long-term thing. It's not something that's going to take effect overnight, even if the bank supervisor was in place immediately. It will take time to push regulation throughout the Eurozone and to make things more uniform. I think that the data do highlight that there are still big risks for the region's banks, particularly those exposed to the peripheral economies who are still in very deep recessions and indeed deepening recessions. But that can be dealt with at a national level in terms of making provisions for future losses and perhaps in terms of keeping state money aside where possible to bail out banks that are in need of that help. That said, the bank supervisor should be helpful in the longer term. It should hopefully mean that the kind of situation that we're in now doesn't arise again, but I don't think it can do all that much to solve the current problems, unless, of course, there are big region-wide bailouts where German money is effectively put into the banks in the periphery, and I think that's something that Germany is quite strongly against.
That's all we've got time for, but thanks very much, Jennifer, for your insight. We'll be back shortly with more exclusive interviews. For now, though, goodbye.